Hi, and welcome to Lever Brothers tutorial on ascending triangles. Ascending triangles form an uptrends and are characterized by a series of higher lows but the same highs. They have a definite bullish bias and typically form in 2 to 8 weeks. It's as if a massive sell order has been placed at the upper trend line, and even though the stock is strong and in an uptrend, it takes some time to fully execute the order. Once that overhead supply is absorbed, the stock is free to catapult higher because the lack of supply shifts the supply-demand imbalance to once again favor the buyers. The best breakouts occur 1/2 to 3/4 of the way through the pattern. Breakouts that are delayed until prices crowd into the apex usually fail or are mediocre at best. If by chance the stock trades below the lower trend line, it's not necessarily a reason to go short. Instead, traders ought to simply redraw the lower trend line and keep looking for an eventual break to the upside. It's not uncommon for an ascending triangle to morph into a rectangle. This act of redrawing a trend line is pretty common because drawing trend lines is a subjective art at best. They are a trader's guess as to where support and resistance could be or should be, so redrawing them is permissible. Volume usually diminishes as the pattern develops and then should surge upon breakout. Failure to accomplish this doesn't render the breakout invalid, but a yellow flag is raised and appropriate stops should be employed. There are a couple methods used to determine the expected price movement. 1. The widest part of the pattern will dictate the price movement out of the pattern. 2. Price movement will equal the move into the pattern. And 3. Price movement is likely to be contained by a trend line drawn through the high of the triangle and parallel to support. The extent of an advance will often depend on the overall market. A strong market will greatly help in achieving a more ambitious target, but in a weak market, a trader should be happy with a moderate advance. Let's go through a couple examples. Here's Wellpoint. The stock was trading up when it consolidated in an ascending triangle which eventually resolved up in the direction of the trend. Volume didn't surge upon breakout, but the stock never fell below resistance and got pretty good separation within a couple days. The size of the pattern was too conservative forecasting the target, while the move into the pattern was more accurate. Which target you use depends on the overall market. Here's Sam Adams. The stock traded into an ascending triangle with resistance clearly established at $12. Volume surged on the breakout and the stock never looked back. The size of the pattern accurately established a first target, while the move into the pattern did a good job giving us a second level to look at. Also, a trend line drawn parallel to support and through the upper left corner of the pattern gave us an idea as to where each price surge may run out of energy. Here's Chipotle. The stock jumped better than 35% in less than 2 weeks and then rested in an ascending triangle before busting out on a steady flow of strong volume. This is another example where a trend line drawn parallel to support and through the top left corner of the pattern indicated an area where the stock would run out of upside energy. Let's quickly go through a few more. We find it helpful to look at successful pattern formations to train our eyes. Ballet Technologies, textbook breakout on huge volume. Lyondell Chemicals, not extremely exciting, but you can't argue with the result. Movie Gallery, volume was huge and so was the percentage move. Precision Castparts, steady trend consolidated in an upsending triangle, and then we got a steady flow of volume when the stock busted out. Singing Machine, this ascending triangle was a brief pause within a strong uptrend. STKL, higher lows and the same highs clearly define the pattern, and volume surged nicely on the breakout. Zeus, textbook play. That wraps up this tutorial. Again, ascending triangles are pauses within uptrends and should see a significant increase in volume upon breaking out. The extent of an advance will often depend on the overall market. A strong market will greatly help in achieving a more ambitious price target, but in a weak market, a trader should be happy with a moderate gain.